And so I'm going to give you a very quick and dirty snapshot on what car fringe benefits are all about. Hopefully then you'll understand the next video, right? So this is not meant to be an entire dictionary on the car fringe benefits. It's just so that you can learn what the basics is and then just take it and go prepare a tax return straight away. All right, so yeah, obviously if an employee gets a car that's paid for by work, that's a fringe benefit because it's non-cash, and so that's subject to FBT. And there are two ways of working out a car fringe benefit. One is the statutory formula method, or what we call stat method, and the other way is operating cost method, or op cost method. And this is how it works. All right, so the first place you want to go to is the FBT guide for employers on the ATO website. And I like to use the legal database version because I find it just easier to navigate. So I will send you the link. Make sure I include the link in the resources area below. So you can see introduction, etc. But go straight to chapter 7, which is all about car fringe benefits. And then, have a read in your own time, but what we're focusing on is the difference between stat method and op cost method, and how to actually calculate the car fringe benefits under these two methods. So the first thing that you need to know about FBT is that it is calculated based on a formula. FBT payable equals to taxable value times a particular gross up rate. There are two types, and I'll explain that a bit later, but all you need to know now is that if it's type 1, then it's GST inclusive, means that it'll have a higher gross up rate of 2.0804 or something, and if it's exclusive of GST, then it's a lower gross up rate, which is 1.8 something. The software will work it out for you. And then you times 47%. So that's FBT payable in a nutshell. And so really the whole calculation of FBT comes down to what is the taxable income of that fringe benefit. And that's where we're going to start with the stat formula method. Stat formula method is very simple and doesn't require a lot of information, and that's why employers like to use it, because there's no headache and there's much less substantiation requirements. And this is what the formula is all about. So it is basically taxable value equals to the base value of the car, which is like the cost of the car, GST inclusive. It includes a few other things, but basically it's the cost of the car, times the applicable statutory rate. So it used to be all sorts of different weird rates, and the more people drove around, the higher the odometer readings, then the lower the rate will be, which is why you might have found like some friends and families trying to drive their car around in March to reduce the FBT. All that is gone, and there's only one flat statutory rate, which is 20%. Times the number of days that the car was available for use by the employee, and let's call that, I don't know, let's say the car was available for use 365 days a year, divided by the number of days in the FBT year, and that's it. But then it can be reduced by employee contributions to bring down the taxable value and reduce the FBT. So let's call that employee contributions. And that's it. Now you know how to calculate the statutory formula method. And I'll quickly show you as well where it actually fits into the tax return. So let's jump into a FBT return. And all these things you can just Google, right? FBT return, ATO. All right, so that's the FBT return. First two pages are basically business details, so you don't even have to really worry about them. Third page, you kind of need to get the information from page 4. So this is really the guts of the FBT return. FBT return is only 4 pages. Don't worry about it. It's not that complicated. Most people are really worried about FBT, but it's really easy. It's just that the substantiation and record keeping is what drives people nuts. So anyway, getting back to cars, that's where it goes into. So you've got all these different fringe benefits, starting from cars all the way to meal entertainment at the bottom. So we are looking at cars under the statutory formula method, and you put in the number of cars, and then you would put in the gross taxable value, which we have calculated, and then the employee contribution, which is this item here at the end. Gross means without the employee contribution, by the way. And then there are no value reductions. So value reductions are more like if anything's like otherwise deductible, which you might hear and we'll cover off in another video. And then finally, you get the net taxable value of the benefit. And then how it fits into the FBT calculation is here. So you basically take all of the taxable values of type 1 and type 2 fringe benefits, and because cars are GST inclusive, it's a type 1 fringe benefit, and you lump it all together and chuck it into this 14A here, and then you can see it. You times it by 2.0802 to gross it up, and that gives you a certain number, and then you apply 47% to get you to your final FBT amount. Don't worry about all these items, 17 and 18. They are for special entities like not-for-profits, hospitals and schools. Oh gosh, that is like subject to a whole different lecture. Then you reduce it by your installment amounts to get to the final additional payment or credit that is due to the employer. All right, so that's that formula method. Let's move on to operating cost method. All right, operating cost method, as the name suggests, is working out the taxable value based on the cost of running the car. And so taxable value equals to all the operating costs of the car, and we'll go through that in a bit more detail, times the private percentage of use, which can be worked out as, 100% minus business percentage, and then, less employee contributions. And operating cost is really, everything that it costs to run the car, from rego to insurance, fuel, what else? Repairs and maintenance. If the car is leased lease fees. But if the car is owned, then you would need to calculate depreciation and interest on it. And it depends on, and depreciation is based on the cost of the car, which is GST inclusive. Yeah, obviously, a lot more detail around this, and you can find guidance on it in the ATO guide for employers. But this is really just a quick snapshot on how you calculate it. And really, as you can see, the big thing that can potentially reduce the taxable value is the business percentage use of the car. And this is where logbooks come into play. So how would the employee substantiate how much business use the car has been through? By keeping a logbook. So there are lots of rules around logbooks. They have to be kept for at least 12 weeks. It has to be representative of the year that the employee has used the car. And basically it looks something like this. So if you go into chapter 4, you will see a sample logbook record here. So it's not rocket science. You write the dates, start of the odometer, end of the odometer reading, and then business versus private kilometers traveled, and then, purpose of the journey. That's what a logbook looks like. And then the employee basically adds up all the business kilometers. So business Ks divided by total Ks to arrive at a business percentage use. And then that goes up here. And then that taxable value goes into the tax return. So let's go back to our tax return. And as you can see, let me make it a bit bigger actually. Cars here under the operating cost method, number of cars, gross taxable value without the employee contribution, then employee contribution, and then taxable value, and then it goes up into to be aggregated with the other type 1 fringe benefits, and then you arrive at your FBT. All right, that, my friends, is a very quick and dirty snapshot on how to calculate car fringe benefits tax. You're welcome.